So doing a quick 2025 look back from a lending point of view today, and I think my number one takeaway looking back would be the return of property investors. Now, we do a lot of work with property investors, and I would say 2021, 2022, 2023, very aggressive property investors. We'd have clients buying multiple properties, and a lot of, I guess, normal mum and dad and people dipping their toe into property investment. And this basically fell off a cliff in 2024 for a combination of things. Primarily, obviously, interest rates are higher, which means everyone's got less affordability. But I think almost more importantly, people felt less confident and felt poorer. And when you feel less confident, you feel you've got less money, you are less likely to take risks and you're less likely to make large purchase, which an investment property obviously is. And that really started to come back probably Q2 this year. And it's been interesting to see that really start to accelerate throughout this year. And I think it's going to continue into 2026 because not only do we now have, I guess, a relatively balanced market, but there's one of those things where there's still a shortage of supply. We're still somewhat in a falling interest rate environment. We've still got population growth, increasing demand, and we've still got all these additional first-home buyer schemes increasing demand, which means that property prices are probably going to grow pretty well 2026, probably going to grow pretty well 2027, and people are more likely to invest in property when they see these prices increasing. So no more takeaway this year was the return of the property investor, which I think will continue into next year. I think that the two markets that I'm seeing the most people buy in currently would be regional Victoria and Melbourne, with a little bit of Tasmania mixed in. Be interested to see what happens for next year.